Thought Leadership from PwC's National Office.
Hello, this is PwC's Accounting Podcast, and we're back with Sustainability Now. I'm Heather Horn, PwC's U.S. Sustainability Technical Leader, and I'm happy you're with us today. So regular listeners will know we've been talking here on the podcast about changes to ESRS as a result of the European Commission's omnibus proposal to simplify those standards. And obviously none of those are enacted yet, but we've been talking about it quite a lot. However, today we're going to turn our attention to another standard setter, the GHG Protocol. So despite its wide use around the world, as many of you will know, the protocol's core standards haven't been revisited in over a decade until now. So today we're going to focus in on their ongoing standard setting efforts and specifically the GHG Protocol's proposed changes to the corporate standard, Scope 2 guidance, and Scope 3 standard, as well as many details around those. So these revisions are coming at a critical time because of expectations from regulators and investors continuing to evolve. So I'm very happy to be joined today by Marcin Olowinski, who, as regular listeners will know, is the chair of our Global GHG Working Group, lots of hands-on experience with clients and otherwise. Before we start though, Marcin, one more thing for our listeners/viewers. This is a video podcast we're recording. So if you are listening and would like to see us live, head on over to the show notes and you'll see that link. And then in addition, everything we're talking about today are proposals under discussion. These haven't even made their way to exposure drafts or risen to that level yet. But we thought it was important to talk about them now because they really could have a substantial impact on the standards. But don't take any of this, for being a sort of a done deal. And I think, Marcin, we would expect that these proposals will evolve a lot before we see the final form.
Oh, yeah, definitely. There's first of all, good morning.
Yes,
nice
good morning to you too.
But you're absolutely right. I mean, whatever we're going to be talking about today, this is what we compiled based on review of things on their website. And this is really ongoing project. So expect everything to evolve and potentially quite substantial changes, even from a topic that we're going to be topics we will be discussing today. So
yeah. All right. So then, Marcin, maybe just to kick things off, let's maybe rewind a little bit and just remind people exactly what the GHG Protocol is, maybe what its role is, and then we can get into some of the changes.
So yes, because it has a long history.
Yes.
So the GHG Protocol was launched in 1998, and I need to, refresh. I look at my dates here to make sure I'm not making mistakes.
I know, almost 30 years ago.
Exactly, by World Resource Institute and World Business Council for Sustainability Development. First standard, accounting standard, corporate standard was published in 2001. And when you look at that, for last 10 years, there's no really substantial changes. So what the protocol is, it's basically accounting standard for GHG emissions reporting. Historically, it was used primarily on voluntary basis for companies that wanted to report emissions, show how they track the performance over time, how they meet targets. But again, it was primarily on voluntary basis. I don't want to use the word stale, but it was essentially of a standard that is kind of untouched for almost 10 years. And in the meantime, we have all these developments of regulatory frameworks, as you mentioned, ESRSs, IFRS. California, we used to have SEC climate rule, which we don't have anymore. But so now we have all these evolving requirements, and a lot of them are pointing back to GHG Protocol that is kind of old, put it that way.
Yeah, and I think you were nice to say you don't want to use the word stale, but I think to be fair, we did run into a lot of issues for wave one reporters under ESRS because there are aspects of the GHG protocol that are no longer aligned with the accounting standards. And so, for example, in areas like leases, even in some cases, some of the discussion on consolidation or otherwise, some of the guidance around different ways to determine organizational boundaries. So I think this is very welcomed. Before we get into the details, though, we probably should just remind people that in addition to these changes that the technical working groups are working on, the GHG protocol actually did spend, I think it took them almost a year to reorganize their governance. And I do think that's particularly important given the role in the reporting ecosystem that you talked about. So do you want to run through that?
Obviously, as we mentioned, we see development of all these regulatory frameworks, and GHG Protocol recognized that they need some action, right? So back in 2023, it was, I think, around that time, they issued a series of surveys to seek feedback from various market participants to understand, are the changes needed, what areas need change, what they should be focusing on, right? They receive a lot of feedback. And as you mentioned, one of the foundational element was about their governance, right? So people commented on their need to revamp their governance structure and a standard setting process, right? So that was very kind of a foundational, and they reacted, right? So when you look what happened after they received feedback through surveys, they restructured their governance process. They introduced 3 types of new bodies, which is steering committee, independent standard boards, and 4 technical working groups. And they also revamped the standard setting process. So let's maybe pause for a second. So what are these new kind of bodies? So steering committee is basically the new group that sets the strategic guidance and directions for GHG protocol, thinking, what they should be thinking about for a longer period of time, what strategic changes are needed for to standards. So it's kind of like the body sitting on top, thinking about long-term planning and strategy, right? And they also are responsible for ratification of any changes to the standards. Then you have an independent standard board who is actually responsible for recommending to steering committee what changes are needed, approving any changes as well before it is being ratified by steering committee. And they also are responsible for selecting members to technical working groups and oversee and have an oversight role for technical working groups, right? And then we get into 4 technical working groups, and those are, I'm going to use the word like working horses, right? So they basically multi-stakeholder groups that are responsible for actually working through potential and proposed changing, identifying the ideas, drafting the updates to the standards, and debating before it's being submitted to independent standard board for approval or put through the review process. So I think that was because when you think about it, right, every accounting kind of a governance body, like whether this is FASB in the United States and in other countries, the foundational element to be credible body and to create standards that are credible, it's their governance. And I think there was very welcome change what GHG Protocol did. But that's not the only thing when we're talking about governance. They also revamped this or designed the standard setting process. So they basically designed the process, which, as we say, starts with technical working groups, working through the details. All the changes are going through ISB or Independent Standard Board for review approval. There is a part of a process that requires public comment period, which it's the draft will be available to the public to submit comments, and then final approval of ISB and ratification by steering committee. So it's, I don't want to say mimic, but like it's very similar to what we see in developed accounting kind of standard processes.
Yeah, and I think similar to what we see from the ISSB in terms of the IFRS Sustainability Disclosure Standards, or as you reference FASB or the IASB. But I think, Marcin, I do want to come back to the process because if you think of the urgency with which we need these new standards, it sounds like that's going to take some time. But let's come back to timeline at the end once we talk about some of the potential changes. So you mentioned that there are 4 working groups. Can you just give some highlights of what those groups are and then some of the focus areas of the group?
Working groups are arranged along the line of existing standards, GHG standards. So we have a corporate standard working group, Scope 2 working group, Scope 3, and market and instrument working group. And they all focus on different elements of potential updates, right? But they also just want to make sure they just don't work in silos. They work together. But their main goal is just to focus what changes are needed in those specific standards. Based on a survey and feedback that they received, each group designed what was called standard development plans, right? They are public. Everybody can, they're like 15 pages each or something like that, which outlines for this round, this is what this working group is going to focus. Those are the elements of the standards that I identify based on the feedback, and they're going to be focusing on this one. So starting with corporate standards, they have actually 3 subgroups, and each subgroup focuses on something on different elements of corporate standard. And the main focus currently is clarifying the objectives and purpose of corporate standard, like in a broader world of GHG emissions reporting, looking at such a foundational element of a standard like organizational and operational boundary, looking at topics related to tracking emissions over time, setting targets, and it also, they considering whether scope 3 reporting requirements should be embedded into corporate standard as well. So it's pretty broad, which it makes perfect sense because corporate standards is sort of, the basis for all the reporting. And then you have a scope 2, and a scope 2, they're looking on also clarifying objectives, looking at specific potential changes to the reporting and calculation methodologies between market-based and location-based emissions calculations. Also looking at what is the role of project-based accounting methodology in scope 2, and how it interacts with scope 3. Because when you think about it, scope 3 emissions calculated using one of those methods oftentimes is an input to calculate scope 3 emissions for the purpose of value chain reporting, right? Then we're moving to scope 3, a working group. Again, 3 subgroups reflecting complexity and a volume of potential changes. And they focus on various topics, starting with looking at materiality, looking at minimum boundaries of each category within the scope 3, also focusing on target setting and the performance tracking. And they have entire kind of a working group focusing primarily on category 15, which is reporting of emissions for investments or finance emissions, investments, debt, loans, and things like that, because that's very complex part of scope 3. And then last but not least, markets and instruments. So when you think about the history and existing guidance, what we call market methodology is only available for scope 2. Right?
Yes, we've got lots of questions on this point.
But a lot of people are asking how we should be thinking about this for scope 1 and scope 3, especially in a context of setting targets and demonstrating achievements or progress in emission reduction. So we have a separate working group that looks at interactions between existing emission reporting and a project based standard, how those things, is there any way we could make it work together, and how to answer these multiple questions for market participants, because we have a lot of market instruments. Those are not only RECs or anything for scope 2 reporting. There's various types of market instruments are available for clients, but it's really unclear how to use it, how to reflect it in emissions reporting. Is it even allowed or not? So I think it's a very important element of the process to clarify those things, right?
I agree. And just again, for our listeners' benefit, RECs, renewable energy credits. So those are used to offset emissions from coal or gas or otherwise. But to Marcin's point, only scope 2. This is not a podcast about RECs, but as Marcin knows, we try not to use acronyms here on the podcast.
I was very careful, and you got me.
Anyway, just teasing Marcin. But Marcin, I think one key point before we go on is that this is all public information. What we're sharing today is available to any of our listeners who wanted to dig in further and understand more. This is all available on the GHG Protocol's website.
Yes. So it's interesting. You mentioned before that there's little time, changes are needed, but like as I outlined, there's a lot of work to be done.
Yes, a massive
In my
amount.
opinion, they're actually moving pretty fast. And it's reflected, as you mentioned, they publish minutes on their websites, their plans. So the pace of the work is pretty fast. It's just the existing timeline is fully reflective of complexity that they have to deal with. Because the good governance is like you really want to go through the process and make sure that the proposed changes are vetted or make sense. And you also be thinking what impacts they're going to cause on multiple companies that use the protocol to report emissions. So yes, it's all available.
All right. So with that said, we obviously do not have time today to dig into everything, but let's try to hit some of the highlights and, we can keep this moving along. So where would you start in terms of the most important? I personally would start with organizational boundaries because it's an area where there's a lot of discussion. Think that's where you would also start?
I would start with organizational boundary because as many times we mentioned on our podcasts, and in this mini series, it's a starting point of emission reporting because it helps you determine what should be included in emission reporting. So as I mentioned before, they're looking into this currently for for our viewers and listeners who are familiarized with emissions reporting, GHG Protocol allows for optionality. So that they outline 3 methodologies that could be used to determine organizational boundary. Again, when you think about organizational boundary, it's like consolidation methodology. So which subsidiaries operations should be included in emissions reporting. And currently there's optionality, right? There's a financial control approach, operational control approach, and equity share approach, which, as you can imagine, it introduces certain level of challenges, right? Because how to select that, how to apply it properly. There's certain diversity on the market, what people choose and how they apply this. So Protocol Working Group recognized the challenges and are considering currently, are we okay with this optionality to stay? Again, they haven't made any decisions, but that's what they're looking at. Should we continue allowing for optionality? Should we just, the other option would be, should we just select one and say this is the methodology you should choose? Or maybe something in between, like maybe we keep the control approaches, but skip the equity share, which currently is not very popular. It's not used that often by. So they're debating. There's no decisions made, but they really kind of considering this really hard. Together with that, because like if you make changes, remove one or the other, they also look into existing definitions. So starting with financial control. They're looking at, should the definition of financial control be updated, should be clarified? Because as you remember, currently, financial control is defined as an ability to direct the financial and operating policies, right? A lot of people interpret that already, that it's equal with consolidation of financial statements, but that's not how it's written, right?
Well, to be clear, PwC interprets it that
exactly.
way.
Yes, but we're not the only ones, right?
Yes. And no, many people. Yes.
But that's not how it's written. So they, the one of the directions that they're considering is to clarify that and make it explicit in a standard that financial control boundary equals the financial consolidation. So you purely follow what is consolidated in your financial statements, which means unconsolidated joint venture, for example, or equity method investments would be excluded from scope from the boundary, or you wouldn't report scope 1 and 2 for those. And in my opinion, it's a good consideration. Would be easier because you remove certain level of ambiguity there. You simply can point to what's already decided and reported on, being financial statements. So I think it's a good directions they want to take, and they believe that the clarification is needed to remove any ambiguity. Again, it's all discussion at this point, right? And last but not least, they also looking at operational control. Operational control, in my opinion, is even more challenging because there's not really too much guidance out there how to practically apply that. And we know there's diversity in practice. In fact, it was one of our suggestions just to clarify operational control, provide more guidance. And that's what they're considering. Should we clarify operational control and also provide more examples and guidance so that would potentially improve the consistency of application? Which again, I think it's a very good idea, especially that we don't know whether they're going to retain this or not, like this optionality. But if they do, operational control is very frequently used methodology in various industries. So having clarifications would be very welcome change.
Yeah, and I think it's interesting for both operational control and financial control. I mean, when we were putting together our guidance and interpretation, this is some of the areas we spent the most time on. And as I kind of jumped in there, I think it is generally accepted that financial control equals the financial statements. I think for operational control, it is a bit hazier. I think we're comfortable with where we landed. And if you look in our sustainability reporting guide, but the way it's written right now, there is a lot of overlap between those two and a lot of interpretation needed to kind of tease that out. And so I do think more guidance here will be very helpful. So it'll be interesting to see what they come up with. And then again, for ESRS reporters, it'll be interesting to see if FRAG proposes a change in its revisions to ESRS, because right now, obviously, you have both together, which is another challenge that's not for today. So, Marcin, those are obviously very big. I know you mentioned Scope 3 guidance potentially becoming part of the corporate standard. And I have to say, if we move on to that one to me really seems less momentous, because I think for most of, many companies at least, they're either reporting under the guidance of ESRS or the ISSB standards, or they're preparing for compliance with California, all of which require Scope 3. And many voluntary reporters have already decided to report Scope 3. However, I know this is an important point, and I know you have some points of view on this.
Well, I mean, I personally was going back and forth. Is it really needed? But so let's step back. Why is working group even talking about this? Because when you think about the current standard as written, as I mentioned before, the first working protocol, GHG Protocol, started with corporate standard. And at the time, focus on that was primarily Scope 1 and 2. Obviously, Scope 3 is considered, but it's only optional reporting, right? Which makes sense. We're starting emissions reporting. Value chain is very complex. There's no calculation methodologies, and corporate standard doesn't have any calculation methodologies or any specifics, right? So in that standard, the reporting of Scope 3 emissions is optional, right? But then subsequent to that, they issued Scope 3 standard, which mandates reporting of Scope 3 emissions, and also technical calculation guidance for Scope 3, which is the third document, right? So with 3 documents with slightly different approaches. If you look at a Scope 3 standard, there's even a chapter that focuses on that, how to navigate the differences between corporate and Scope 3 standards, and outlines 2 potential scenarios. If you want to claim compliance with corporate standard, Scope 3 is not, you don't have to. But if you want to comply with Scope 3 standard, right, you have to. And it's just like,
it's
just
confusing.
It's very confusing.
Yes.
So I think that's the reason they decided to kind of consider bringing it and make it in part of corporate standard, a part of a required reporting. Another reason is what you mentioned, all the other reporting frameworks require reporting Scope 3. So having some optionality in there might be even more confusing for everybody. But it, like when you think, okay, so should we just say, yeah, it's required, move on? Unfortunately, it's not so easy because of you have a Scope 3 standard calculation guidance.
Yes.
So do you bring part of that into corporate standard? What about measurement methodology? Do you remove the other 2 and bring everything to one document? So they have to make a decision technically how to make the change and how in the future these 3 documents are going to be working with each other. So I think, again, it's going to take them some time. Technically, it's not going to be that big of a change. But if they want to make it right, they need to be thinking through all the details that I just mentioned, right?
Yeah, actually, Martin, one thing I was just reflecting, because we talked about the fact all these standards now require it. So when we go back in time, corporate standards issued 2002 timeframe, I think, 2001. So not required. Even TCFD, which was issued around 2017, did not require reporting of Scope 3. I think it was highly encouraged, or they had some wording along those lines. But now we fast forward, so 8 years from 2017, or I guess 6 years from when all those other, when ISSB and the ESRSs were issued, that we see that then Scope 3 standard is being mandated. And I do think that shows some evolution of reporting. So it's just interesting to reflect on that. But to your point, how they're actually going to do this, is potentially interesting to see.
They also like considering how to improve or clarify concept of materiality in a context of broader emissions reporting, and in the context of Scope 3 in particular. How do you apply materiality concept to determine relevant and significant categories of Scope 3, whether Scope 3 altogether is material. So they actually, the corporate working group and a Scope 3 working group, they're thinking about like maybe we should put some quantitative thresholds in there, working together, just making sure that they resolve it properly. So it's kind of interesting how the cooperation looks like and how challenging it will be, right, to make everything kind of synced in.
With Scope 3, we also have the technical working groups that are focused on different elements. So what else are they focused on?
I think the main focus of Scope 3 working group, and that's my opinion, right?
Yes, from the notes that you can see publicly.
What I could see there. It's truly looking at the boundary of reporting and the minimum boundaries in each category. So clarifying, looking at, various levels of optionality in there. So they spend a lot of time on that. And as I mentioned before, category 15 gets special consideration, right? So, and why is that? Because when you look at that, it's difficult to say one category is bigger than the other, but it's complex, right? Because we're talking about reporting emissions from finance emissions from underlying investments that regular company have, or financial institution like bank or insurance company might have. So when you think about this, there's a lot of different type of investments, right, that companies can make, and regulating how to capture, measure, and report emissions from those might be complex. What makes it a little bit challenging even today, currently Scope 3 standard requires only 3 types of investments, which is debt and equity investments and project finance to be reported, which
with known use of proceeds.
Exactly.
So it's not, I mean, it's very narrow.
Yeah.
Yes.
So it's very narrow. It represents only fraction. Maybe for like regular production company, it's sufficient. But when you move to those various types of financial institution, of financial service companies, that's only small fraction.
Mm-hmm.
What makes it even more complex? Those institutions over the last few years got together and developed their own standard, right? To report emissions and measure. So they kind of as their industry approach, which is called PCAF, or Partnership for Carbon Accounting Financial. There's 3 parts of this. So there's additional guidance in the market. So I think if you have a different bodies issuing the guidance, different level of guidance existing in the market, that increases complexity and creates challenges. And working GHG Protocol reviewed actually one of this, Part A, and endorsed it, but never reviewed Part B and C. And so I think that this working group is trying to look at what is my entire, let's say, universe of Category 15 reporting, and what changes should we make to make it more transparent, more kind of workable. Therefore, they're considering expansion of those type of investments or asset classes to be included. They're looking about different other types of debt. They're looking at insurance products, facilitated emissions associated with different kind of market transactions. They're looking at asset managers. So kind of going more or less, or at least being inspired by the guidance that currently included in PCAF Part A, B, and C. So again, we don't know where it's going to go, but they spend a lot of time trying to think about this category, which could have a very consequential kind of an impact on reporting of this category and emissions in that.
Yeah, so I mean, definitely an area to watch. And again, this is another area we potentially could see some changes in ESRS as well.
Mm-hmm.
That's one of the recommendations we made to FREG. So it will be interesting to see how these both progress. And again, I think from financial institutions, this is obviously one of the biggest areas. You had mentioned specifically that, this Scope 3 technical working group is very focused on the minimum boundaries. And I think when we talk about the main areas of issues, this is probably the number one area of issues we saw for the year-end reporting. So it's very important they're focused on this.
And especially that one could argue that those different regulatory frameworks might have slightly different approach to those too. So I think clarifying and bulletproofing those concepts and within Scope 3 is going to be very important. It may make it more difficult for companies because of might make it easier.
Yes.
We don't know.
Yes.
But I think that some changes are kind of will be welcome.
Clarity will be helpful.
Yes.
So Marcin, let's change our focus to Scope 2, and maybe a key reminder before we get into Scope 2. We talked about the fact Scope 3 standard is separate. It's not really part of the corporate standard. One thing I think to highlight that I've always found interesting is the Scope 2 guidance, which is also a separate document, is actually technically part of the corporate standard.
Yeah.
So I think this is something that's always confusing to people. So then when we're talking about Scope 2, that guidance is already part of the corporate standard, albeit in a separate document.
Yeah.
And so I guess these changes also would be part of the corporate standard document-wise. We don't know where that will look. So I just think that's an important level setting, because I do think it's a point of confusion.
No.
Okay. So I just, in terms of what they're focused on, what are areas of focus for Scope 2?
So as we mentioned before, Scope 2 guidance, that's a good point there, is the only part of a GHG protocol that introduces the concept of market-based accounting, right? Which for our viewers who are familiar with this, just a reminder, currently recognizes two methodologies to calculate Scope 2 emissions: location-based and market-based. Location-based, in few words, uses the average grid average emission factors and does not give any recognitions to any contractual instruments or decisions that companies are making, let's say signing the renewable PPA or things like that, versus market-based approach or methodology gives recognitions to those. So you can consider contractual arrangements, emission factors truly representative of your decisions that you're making. So if you enter in some renewable energy agreements, it will be reflected in calculation of emissions under market-based. So that's kind of a preface. Why it's important? Because during the survey process, they received overwhelming number of comments in this area, kind of a challenging application of market-based and location-based calculation methodologies, with reporting entities and some renewable energy industries advocating or supporting market-based methodologies, asking for more changes in more guidance how to practically apply, but basically saying we should retain this duality, versus some academics and NGOs were very skeptical of market-based methodology, especially when it relates to use of unbundled kind of instruments in there. And they question, is it really kind of a representative of emission reductions? Does it help in the whole process? So I think they received a lot of comments that drove them to kind of look into and say, what do we do with this duality, right? Do we still support both? Do we need to provide more guidance and equality criteria? So I think that's the main focus right now, how to improve that reporting of Scope 2 emissions.
Yeah, and I mean, it's interesting because you and I have debated this quite a bit, and I definitely have some sympathy to the view that location-based is really the best. I'll use the word the best way to measure, but I do have sympathy for market-based and this extremely complex issue, particularly if for people I think that are not deep in how the energy markets work or the electricity markets. So it's good to have this working group specifically focused. I guess we don't really have a sense then of directionally and where this may go.
Well, there's a few possibilities. They've been discussing a few things. So for example, as it relates to, so whether they're gonna stick to one, keep one or stick to two, it's unknown. But like they considering any potential changes to both. So for example, for location-based method, they looking, can we improve the quality of the guidance in terms of use of data? Should the companies, what's the best available data that should be used? How you really reflect the real grid emissions and what emissions factors you're using. So thinking about potentially, right, what's the time period, how you match the time of generation and utilization of power. Because right now, a lot of people use average annual grid emission factors. They're thinking, should be increase the frequency to be monthly, quarterly, sometimes even daily. So they looking into that. And the main goal is to improve the quality of that information. So,
and maybe, Marcin, before you go on, I think where that is so critically important, and again, this is where if you haven't really focused on the electrical grids, it's like, well, what difference does it make if it's average or not? But depending even on the time of day that you're using electricity, it could be much different between, the wind blows more maybe at night, but you have more solar during the day. And so in different even parts of the country, you will have different what they call these mixes depending on time of day, much less the month of the year, much less, so over a period. And so if you have where your electricity usage is concentrated during, let's say, daylight hours, but you're using this average, it really could almost be misleading from that point of view. And so it will be interesting though, because companies aren't used to necessarily focusing on their hour-to-hour energy usage and then how it matches. So it's quite a technical challenge, it seems like.
It is. And the other thing, and that's my personal opinion, you also have to take into consideration what is the availability of data.
Well, right? Exactly. That's where I was going. Yes.
When we look at the different markets, because we're now talking, this is discussion about global markets, right? So the different places, around the globe might have a different level of sophistication and developments and availability of this data. So I think that's another thing they have to consider, right? I mean, how you think about quality and availability of data if you make some changes in there, and how it's reflected in this new updated guidance. So
well, and even to that point, Martin, there's some parts of the world where maybe the source of the energy is much more concentrated, and so then maybe this isn't as important, and so there isn't really a one size fits all for how to answer this question.
Well, and that's why it takes them time to figure out what decisions to make. And the important element is, and we didn't mention that, I mentioned the word multi-stake holders, right? But composition of those working groups is really diverse. So there are people from industry, academia, NGOs, professionals. So like when you look at the minutes of the meetings, it's really good stimulating discussion. And I'm confident they're going to get to the right answer in a long time.
Wow, that's a very strong statement.
But now they have a really kind of a public process to review. Focus. So people will have ability to provide the feedback, right? But that's only location-based.
Yeah, so how about market-based?
So the market-based, as I mentioned, there's a lot of criticism around the market-based. Just one thing, for example, IFRS standards, sustainability standards, they only mandate reporting emissions using location-based.
Right, and then they have another way to report these other market instruments.
Exactly, like additional disclosures about the instrument. So, which I think that's also shows you it's not settled science, but the debate is ongoing and people have a different approaches. So basically what they're looking at, how can we improve the quality of the criteria for the instruments that companies are using? As I mentioned, right now, there's a variety of instruments that people can use, and some of them have higher quality than the others. So you can use the PPA or power purchase agreements with green attributes or renewable attributes embedded in it, right? But you can also buy it unbundled, separate, just attributes without the power. This is the crux of the matter, because people think that these unbundled instruments, they might be misleading. They really do not improve the development of renewable power, and they do not really, demonstrate reductions of emissions. So,
and then there's double counting potentially, because people are actually receiving that power, maybe counting them as well.
Yes, so like they're looking at multiple scenarios, how to improve the quality, right? Should you have some ideas potentially allowing only kind of use the products associated with new kind of development of projects versus existing?
Oh, that's so complicated.
It is complicated.
Yeah.
So most likely they will tighten requirements around the use of those instruments, focus more on maybe supplier specifics, focus on bundle instrument. But again, it's all just discussions, but those are directions and topics that they are picking up.
And Martin, are they talking at all yet about like the use of residual mix factors?
Yes.
Because that's another big issue that in terms of reporting, because using those residual mix factors actually then helps with this double counting issue, but they're not available everywhere.
Exactly. So they exactly when they talk about market base, it's not only instrument, but also residual mix factor, the quality of those factors. How they should be calculated, how they should be reported and used. Because as you mentioned, like in US, we don't have any residual mix factors, right? So that there's no way to reflect utilization of these green attributes and include it in your calculation. So I think they're looking at that too. It's going to be interesting because this topic is, to me, it's really important because the availability of data limits the directions they can take. So I'm curious how they're going to resolve this problem, because they know, and it's not only US, right? I mean, yes, and a lot of geographical locations, countries, or jurisdictions, it's not available. So how you overcome that and create guidance that's going to fit everybody,
right? Because there are available, and for example, the EU, and so then, I think this is a difficult. It will be difficult to balance, and makes me, for any of our listeners that are thinking residual mix, how does this fit in? We did a number of episodes last fall where we explained this in much more detail. It's probably time for another one, but in the meantime, our listeners can go back and listen to that. So Martin, let's move on, because it actually is related in a way to the market-based method, but to the actions and markets working group, or I sometimes think market methodology working group. But you mentioned before why it was created, but sort of what is some of the areas of focus for this group?
Yes, so as we mentioned, like this market-based approach only exists for Scope 2, but there's a lot of demand and the questions how similar emission reduction or avoidance actions taken by reporting entities should be reflected in their emissions inventories. Currently, there's nothing that would allow sort of reflection of these market-based instruments in, like, let's say, scope 1 and scope 3. But a lot of people advocates we have to have some venue, right? Because currently it's a bit confusing how we reflect the use of those in our target setting and a performance assessment. So I think that's the main aspect of this working group, trying to figure out how to really combine, or maybe combine is a good word, reporting of emissions inventories with reporting of those actions and removals of those market instruments. So I think that's the biggest challenge. And when you look at this group, they even starting with definitions, right? Because when you look at currently how there's really limited guidance in GHG protocol about the carbon, let's call them carbon offsets, right? As an example, right? There's not that much that talks about this type of instruments, right? So they start and look, okay, how we should define those, how we differentiate the different type of instruments, and then how and whether it should be combined with inventory reporting. One kind of a potential scenario that they're considering to bring some, let's say, parallel reporting. So you're gonna report your emissions inventory gross and your actions taken to reduce, remove, or avoid emissions separately, right? Within the same report, because they believe and they recognize the fact that some venue is needed.
Yes.
But so that's one of the potential options.
Although in some ways, at least for scope 1, you have that option already. You are required to report gross, and then you can report these actions. I guess my question, and I was thinking maybe for listeners that aren't as focused on this, I'll give an example and you can tell me either a better one or another one. I mean, where we see this question come up is often we have companies that they're doing work to offset their own electricity usage in scope 2. But then let's say they have a supplier that has very high energy usage that isn't counted in their scope 3. And so then they say, well, I want to offset my supplier's emissions and actually show, a reduced number instead of a gross number. And so that's one example. I don't know if you have some other examples you could give, just why this is so important to some companies.
No, it is very good examples. The same applies to, let's say, sustainable aviation fuel.
Yes,
right?
We get so many questions.
Exactly.
On that.
So,
yes.
And a book and claim mechanism, which, by the way, they're looking into it, right? Also, kind of how to consider this. Yes, right now companies can report this type of instruments, like, I call it voluntarily in the same report, but it's not, I would say, we're very well regulated, right, and outlined. There's no guidance about how to assess the quality of these instruments. When you look at the scope 2 guidance,
yes, there's a lot of guidance.
It has very specific guidance as to what instruments can be used, how you assess quality of those instruments, and those quality criteria are very important because they might be kind of if you don't meet some of those criteria, you might not be allowed to use some of the instruments, right? And disclosing the nature of those instruments and quality criteria provides more transparency for users. So I think starting point even is like how we go about definitions, quality criteria, and then how we, I don't know what say word again, combine, but how we kind of have these two systems coexisting so people could take credit. So I think it's important, right? Because you say people doing this, but it's not really. So look at ESRS. They have very prescriptive guidance when and how those type of instruments should be used, which this guidance doesn't exist in GHG protocol.
So it's
right?
a really good point. So I agree. It's very important. I think it's also quite challenging. So any other specifics on this? I know there's quite a bit more to come in terms of what they're looking at, or should we kind of skip over to the timeline?
No, I think that those are the kind of main things. They also starting to look at verification of assurance of, in project-based accounting too. But that's all part of the increasing the quality of these instruments and coming up with a plan how to kind of report that alongside the emissions inventory.
All right, very helpful. So Marcin, we talked very briefly at the beginning about the fact that this is an enormous amount of work that needs to get done. They have these very focused, dedicated working groups. Lots of information out there. What do we expect to see from a timeline perspective?
2025 is a key year because that's where all the working groups are coming up with actual proposed text of the updates, areas where like making decisions. So we're going to see this work throughout 2025. Toward the end of 2025, hopefully the potential updates are going to be put in front of ISB, so Independent Standard Board, for review, approval, and potential changes. The 2026 is going to be, we're going to see the public outreach, so publication of exposure drafts and for comments. And hopefully the updated standards are going to be issued no later than the end of 2027. So there's still a long runway, but it's for a reason. Again, if anybody looks at the plans, it's a lot.
Yeah, and actually I thought some of it may even fall into 2028, but I guess we'll see as it progresses how long this takes. So if I'm listening and some of these piqued my interest or I want to know more, what should people do as this continues to progress?
Follow this, really thoroughly. So because there was a period where there's not much coming in from GHG.
I know, and then suddenly,
and suddenly all the things popped up on their website, which actually, quite frankly, granted, we're all focusing on ESRSs because it was the topic of a day, but it surprised me how much material they produced and how quickly, right? So I would kind of urge everybody, pay attention. Make it part of your day or regular schedule just to check for updates and see which directions they might be taking, right? For multiple reasons. First of all, it would allow you to be more prepared to what's coming and you could start soliciting internal feedback. What do we think about this? What will be our comments during the comment period? And are we ready, right? And that's the other thing. You could also start seeing if those changes are approved and the standards is issued, what extra effort will be required in your organizations to comply, right? So again, I'm not suggesting start making the changes right now because it's unknown, but at least start making those assessments so you know more or less what effort will be required. One thing which we don't know is like what's going to be transition period, or is there going to be any kind of a transition period concept in after the issuance, but especially as it relates to how it works with all the regulatory standards like ESRSs and IFRS, because all of them refer to in one way or the other to GHG Protocol. So people need to start thinking, okay, how to integrate everything.
Well, and I think that's an interesting point because right now they point to specific versions of these standards, and FRAG and the ISSB do both have observers that would have an opportunity to at least observe the Independent Standards Board's meetings. So that will be interesting to see if they weigh in along the way. I think the other thing, Marcin, that stands out to me is that if you look at the composition of the working groups, you mentioned it's very broad. But it's also it's public. And so to the extent that there are issues, I think that are very important to you and that you kind of don't want to wait, I do think could be some opportunity through your industry groups, maybe talking to your auditors or otherwise that, can you talk to some of these people on the working groups, not to inundate them. I don't think they want to be inundated, but I do think these are some of these in particular are topics industry groups might want to start thinking about now, at a minimum, to your point, so that you have a perspective on the ones that are most important to you when these exposure drafts start coming out.
Yeah, I would agree.
All right. So Marcin, I think definitely we will be continuing to release episodes as things develop. I was also thinking while we were talking, it might be helpful to dig a little deeper into some of these so people can understand potential implications. So I guess to our listeners / viewers, maybe you guys can look for that, or you should look for that in the future, assuming Marcin agrees.
Yes.
Okay. Fine. So as always, I just want to thank our listeners / viewers for joining us today. Hope you join us again for some other episodes. And if you'd like to follow us, please follow on your favorite app or look for us on viewpoint.pwc.com. Thanks again for joining us.